Hi, I'm Roger Montgomery and welcome to this week's Video Insight. Well, this week, a quadruple warning for investors. No matter which asset class you're invested in Australia, you could be in for a rough ride. What happens next, time will tell. However, we have some suggestions. If you've been invested in stocks in Australia through Montgomery, you've done reasonably well. If you've been invested in the index, however, over the last 10 years, or any fund manager that's hugged the index, then you've received a return of virtually zero after taxes and including dividends. If you've been invested in real property over the last few years, the gains have been spectacular. However, that could be about to change, and we'll talk about that in just a moment. If you've been invested in cash, well, you haven't really generated a return that's offset the decline in purchasing power from inflation, and it could become a lot worse as interest rates decline further. And that brings to us the Australian dollar. The Australian dollar is also at threat of lower levels simply because the United States is set to increase interest rates. Okay, so what are the threats going forward? Well, for the stock market, it is this. Back in 1981, interest rates were at 15%. The risk-free rate was, in fact, 15%. And the real rate after inflation was 5%. At the same time, debt was half of what it is now amongst US corporates. And remember, this was the start of a phenomenal period of returns for stock market investors. So how can it be now, with interest rates at their all-time lows and with debt at record highs, precisely the opposite of the conditions that existed in 1981, how could it be that now is also a great time to invest? It simply cannot. While debt has increased, EBITDA, or cash flow if you like, has declined. So as interest rates go up, one presumes that cash flow will deteriorate even further. And remember, with this ahead, price earnings multiples, or the price people are willing to pay for their investments in the stock market, are at also record highs. It suggests that we're in for a rough ride in stocks. Having said that, of course, Montgomery remains uniquely positioned to take advantage of lower prices with a large amount of cash. If you've invested in property, in real property, the returns that you've experienced over recent years are unlikely to be repeated. And I say that with some confidence. The oversupply of apartments in Australia, particularly off the plan and new apartments, is so high that it exceeds the total number of apartments that were sold in the last 12 months. In fact, I wouldn't be surprised over the next 18 to 24 months to see apartment prices drop by 20% or more. If you've invested in term deposits, well, it's not unreasonable to expect interest rates to decline even further. And for those of you who are thinking that now is not a good time to be investing offshore, keep in mind that the Aussie dollar could fall even further. In fact, it's the Reserve Bank's expectation that it should. Okay, so what to do? Well, according to Russell Investments, the commentator and researcher, they suggest this. Investors wanting to continue to achieve their required rate of return at a risk level they can tolerate should consider dynamically managed real return funds to gain exposure to a more diversified investment opportunity and be able to quickly respond to changing market conditions. So with that advice from Russell Investments in mind, consider the Montgomery range of funds. The Montgomery Private Fund, for those with more than $1 million to invest, is currently approaching 30% cash to take advantage of what we believe might be imminently lower prices. The Montgomery Fund is now 25% cash for the same reason. And the Montaka Global Fund and the Montaka Global Access Fund not only gives you the benefit of investing in high quality overseas businesses, but also takes advantage of potentially a lower Australian dollar and deteriorating economics and industry structures from disruption, a theme that is taking over the world. So we look forward to answering any of your questions about any of the Montaka and Montgomery funds. We look forward to hearing from you soon. With that, we look forward to seeing you next week. Please follow us on Facebook and Twitter.